Robinhood to being net year-to-date profitable, right? And so that's the point of today's session, is to talk specifically about the systems you do to stay profitable in trading. Okay. And so that's the point that I'm trying to say. There's nothing wrong with Robinhood. I'm not saying anything's wrong with Robinhood. I'm just saying that was the first broker I ever used. And when I was trading on Robinhood, I didn't really know what I was doing. Okay. I didn't know what I was doing. I was making a lot of mistakes. Okay. I have Webull too. Quinton, Webull is actually a good platform as well. Robinhood is fine. You could probably use Robinhood to make money. I have many friends who have used Robinhood. They're very profitable, right? But the problem is, the problem wasn't the broker, right? At that moment, the problem wasn't the broker. The problem was me, right? And so I trade on Charles Schwab. I trade on Webull. But again, the problem wasn't really the broker in that case. The problem was 100% me, and I was just making mistakes all over, making mistakes, doing stupid stuff. And so let's talk about what I did to change that. Okay. So I'm going to start this presentation. The time right now, so we can all plan accordingly, is 5:11. It's 5:11 p.m. Eastern Standard Time. I will be done with my presentation by 5:35. Okay. 5:35 p.m. I will be fully done. That's our game plan. Then we'll do Q&A afterwards. We're going to go fast. We're not wasting time here. Okay. So trading a system, the key things to stay profitable as a trader, right? I am going to show you what I do. The first thing in the morning is to define your setup and your bias on the session. Okay. That means going to TradingView, going to Thinkorswim charting, going to Robinhood advanced charting, right? Legends or whatever it's called, whatever charting technology you use. Doesn't matter what it is. But define your bias on the session, okay? Define your unique bias on every ticker, okay? For example, go through the morning and say, I am bullish on SPY as long as it maintains above 676. I am bearish on NVIDIA as long as it maintains under 198. I am bullish on Tesla as long as it remains under 300, or whatever it is. Some bias or sentiment based upon a level or a reasoning behind something. And if you know anything about charting and levels and structure, then you know how to do this. It's really not that complicated, right? You go to a chart, you jump into a chart, like perhaps you go over to TradingView and you say, NVIDIA, very clearly right now on the 1 hour chart is bullish. You can see here, this is what we did in Friday session. Very clearly is bullish 1 hour chart. Okay, we can all see this. And what would make it continue to be bullish? What would give you a new bullish entry? Well, obviously, over resistance, 214. What would make you bearish on NVIDIA? Well under 211. That would make you bearish. And so what we've just done here is we've said, I am bullish above these highs and bearish below these lows. So why are you trading NVIDIA at 212? That's what I'm trying to say here. If you are bullish here and you are bearish here, why are you trading it in between the zones that you just spoke about pre-market session, right? Why are you doing that? And this is what happens to most traders. What happened to me is I would find myself doing what? I would find myself disrespecting myself. Your plan was to trade NVIDIA and Apple longs. Why are you trading MSTR puts at 9:44 a.m. Eastern Standard Time? Your plan was to trade NVIDIA over 194, 294, 394, whatever it was you were doing. And now you are trading some whatever ticker, right? Whatever thing, or even the ticker you were watching, but not even remotely at the right point because you weren't even watching it there to begin with. The biggest mistake we make is we're trading stocks that aren't in play, right? We're just trading things that are not in play. It doesn't matter who is signaling something. If you said that you were watching NVIDIA over 195 and Brett enters calls at 194, do not enter the calls with Brett. Don't do it. It doesn't make any sense. Same thing with Rav, Mike, Aristotle. I don't trade Meta, right? Rav trades Meta all the time. Rav could say, I am so confident this Meta trade is going to go. I would bet everything upon this. I would bet everything on the Meta is going to rip right now. I would not open my broker and I would not enter calls in Meta because I don't trade well with Meta. It's not anything against Rav. Rav is an absolute animal, right? Mike's same thing, or even Aristotle or Midas. Whatever they said, it doesn't matter. I will only trade what I'm watching, right? and I will trade my bias in my system, and that's simply just it. Now, if Rav said that he was trading NVIDIA over 195, I'm also watching NVIDIA 195. He enters calls too. Well, then by all means, right? Now I have extra conviction and bias in this setup. Hell yeah, maybe I'll jump in, right? Hell yeah, maybe I'll jump in with it. But the problem with a lot of traders in general, and I did the same thing because remember, I was part of this chat as well, is I would just simply enter a trade because Joe Schmo is in that trade. Just because Joe Schmo is in that trade doesn't mean you're in that trade immediately, right? And that's a massive mistake. It's a massive mistake. And I see it all the time. I'll see a guy come in. Their name is Yada Yada Bing. Okay, Yada Yada Bing comes in at 9:29 a.m. and says, I I really I won't buy puts today. I won't buy puts. Yada Yada Bing says at 9:29 a.m. What does Yada Yada Bing do at 9:47? He's in puts. He's in puts. He's full port in puts, right? But he knew not to do that pre-market, but he still does it. Why are you going against your own plans in your own system? Why do you continue to disrespect yourself? Okay. Again, I'm saying this not to be rude towards yourself. I'm not being rude. I mean, this is to me as well. I do the same thing. When I'm back testing, I always will go through and say, hey, what was I watching pre-market and how did I attack today's session? If there was discrepancy between the two, I made a mistake that session. Okay. So disregarding your plan equals disrespecting yourself as a person and as a trader. The next thing is to set restrictions. Follow a strict scenario tree. I am going to show you a scenario tree right now, and I'm going to explain this, and you're going to understand it once, and that's just simply it. I'm not going to go over it twice. I'm going to go over it once. How do I get out of this? Boom. Okay. This is a scenario tree. All right. I'm not going to explain this slowly because you can watch the recording of this if you have to in the future. Let's talk about scenario tree. A scenario tree structures your trading around situations. Okay. So let's just say your first situation day is you start off the session with let me just write this out, one green trade. By the way, is my mic messing up when I start typing and talking? Do you guys notice that? Is it messing up? Let me know. Is it good? Okay. If it gets bad, let me know because I'm using my MacBook right now to present this. Okay, it's not. All right. Let me know if it gets bad. Any mishap in quality, let me know and I'll adjust it. Okay. So you start off your day, right? This is scenario. This is scenario number one. Okay. Scenario number one is one green trade off open. Okay. And that means a normal size green trade. Let's just say you probably just hit a 20% net trade on this. 20% net. All right. So let's just say you had a $5,000 account. No, let's just say you had $10,000 account, right? $10,000 account. You made $400, right? And I'm saying you made $400 because $10,000, right? Let's just math this out for a second. $10,000, $10,000 times 20% of your account in every trade. Let's just assume you do that, right? Times 20% of that is 400. So that's how I got to 400 there. Okay. So let's just say you made $400 in this trade, right? Well, in that scenario, you're happy for the session. You just met your goal on one trade. You could be done off one trade. You could walk away and enjoy your beautiful Monday morning. Or you can come back in and get one more trade. But that next trade you take is on one half size. And the reason why you do this is because you effectively just made it so you can't lose that session. In the new scenarios that present moving forward, you either win that one half trade and make $200 more. Now you're up 600 on the session. Okay. So you're up 600 total in the session. You're beautiful. You're done. You're a happy camper. You just made 6% on your account in one trading session. Incredible. Scenario two is you lost one half size trade, meaning you just lost $200, which means you effectively walk away with how much in the session? $200. In either case, no matter what happens moving forward, you still come across, you're still green, right? You're green big or you're green a little bit, but still enough to walk away and have a good day, right? That's scenario number one. Scenario number two is you start off the session with a red trade, right? One red trade. If you start off the session with one red trade, what do you do moving forward? Well, you probably lost the same amount, right? So 20%, 10,000, 20% of 10,000, right? So $2,000 trade, and you lost $400. You're down 400 in the session. Now, moving forward, how do you trade this? For me, what I would do is I would size the next trade on one of one size, meaning just my normal risk. I'm sizing the same. I'm not sizing down. The reason why is because if I get one nice trade that's effectively 20% win, I'm either at 0% break even or I'm slightly in the green, ever so slightly in the green. And so what I do basically is I size down on successive green trades, but then size the same on if I'm going from a red to a red, right? And if I get two big red trades in a row, I probably stop out on the day and walk away, right? But as long as I am within my risk parameter, and my risk parameter is about $2,000 or even sometimes $3,000, depending on the session, then I will continue to take a trade at my normal size on red trades. Okay. That's how I operate. Right. Now, your scenario tree can be a little bit different though, right? You can adjust this to whichever way you like. But this is generally speaking the scenario tree that most people will go for, right? The third thing would be if you're break even on trade one, so you're BE in trade one, it's the same thing. I'm 1-to-1 on trade two. I'm not sizing down on red trades or break even trades. I'm sizing the same on successive trades. But on green sessions where I start off green, I size down because I'm protecting myself and doing it in a way that protects my account moving forward. That's the scenario tree approach. Now, I don't want to dive too much into that because you guys already know this already. And you have to kind of set this up for yourself in a way that makes sense for your account and how you operate. But that is what I do every single day. And the second thing is to adjust your risk as your account grows. Most often, you hear this all the time, is you hear people talk about the idea of the 2% rule. Have any of you guys ever heard of the 2% rule? Have you guys heard of this before? The 2% rule? The 2% rule is truthfully, it's not an approach you can use on a small account. Do you think I was using the 2% rule when I blew my Robinhood account? No, I was not. Okay, I was not doing that. Do you think I used the 2% rule to grow my $10,000 into 20, $20,000 into 50, 50 into 100, right? No, I don't use it either. Okay. The 2% rule is basically risking 2% of your portfolio every single session. It's not really possible to do that. Okay. When you're growing a small account, it's not possible. When you're operating a $1 million account, yes, it's very possible. When you're trading equity, yes, it's very possible, but not when you're trying to grow a $5,000 account or a $2,000 account or, God forbid, a $1,000 account. It's simply not effective. So, what you're going to do is you're going to start off a bit more aggressive first. All right. You know this already. You have to start. If you're going to grow a $5,000 account to $10,000, you can't risk 2%. It's just not possible. We're talking about dollars here, right? The only approach that I would do is I would follow a rule that looks a little bit like this: 10% of my account in every trade I take. My maximum risk on that 10% that I put forward is 25% and no more ever, right? That's the approach that I use to grow my account. Okay. I'm going to repeat that once more for the people in the back. 10% of my account in every trade I take, depending on if it's 0 DTE or 1 DTE or 1 week out, right? Maybe just a little bit, right? But around 10% maximum. Of that 10%, my maximum stop loss is 25%. If I'm on 0 days, maybe 30%, right? But if I'm on 1 days, my max loss is never greater than 25%. Again, that's the maximum amount. I won't try to risk that. I'll try to risk 10% if I can. It'd be great, right? But in the worst case scenario, everything fails, everything collapses, the stock is dumping and I'm in longs. My max risk is 25% and no greater than that, no matter what. I can always re-enter if I have to, but I won't lose more than 25% of that trade. That effectively makes it so your 2% rule is not 2%. It's a bit larger than that, right? As you grow your account, you can adjust that differently. Maybe your size of each trade is like, for example, I just showed you my Schwab account. That Schwab account's my retirement, right? I have retirement in there. I got other things in there, right? Do you think I'm pulling into every account with $260,000 in every trade? No, I'm not doing that. Makes no sense. It's ridiculous. It doesn't make any sense. But what I will do is maybe go 1%, right? 2%. Okay. As you grow your account, you can become more risk averse. Essentially, is what I'm trying to say. You start off more aggressive, and you get more and more risk averse, getting more and more conservative as time goes on. That's why people know me as a conservative trader. I wasn't conservative. If I showed you my Robinhood account, you wouldn't think I'm conservative. You think I'm a degen, right? I'm naturally conservative, but I grew that way over time because I grew my account, right? Think of it like this. People ask me all the time, right? Brett, why don't you do a small account challenge? Why don't you do a small account challenge? Do you want my honest answer? Because I want money, right? I want money. I want to grow my large account because I do this for a living, right? I want money. I don't want to go back to ground zero for what? That's like giving a Formula One driver a Mazda, right? I'm sorry, that's what it is. Again, I if I had to, I would do it. It sounds pretentious to say. I know it's annoying, but I did it already, and I was in the gutter for a long time. I was in the gutter for a very long time. I didn't have any money, right? Now I have a little bit of bread in my account. I grow the account like that. Eventually, maybe I'll do a small account challenge, but that's my answer to that question. Okay. It's hard to grow a small account, and I'm telling you honestly, it is hard, but you can do it. Not everyone can do it, but you can do it, and it's possible. I did it. Do a big account challenge. That's what I do every day. That's what I do every single day. I trade off of that account every single day. Okay. Again, I'm just being honest with you guys. I'm just telling you what I'm thinking. Okay. Okay. Let's move on. So, developing. If you're a developing trader, I want to talk to you about something different. We're taking a pivot right now for a second. We are going to completely pivot for 1 second. Should the small accounts follow you guys on live or just Midas? Small accounts can follow us on live, 100%, right? But you have look again. Think of it like this: if I'm in Nvidia, right, on Friday session, and the conducts cost $200, I'm buying 50. Do you need to buy 50? No, you can buy two, right? You can buy two of them, right? You don't need to, you can follow us on a small account. You don't need to have a large account to follow me, right? I'm not trading Connex at $2,000. I'm trading the Connex that I got in NVIDIA. I bought NVIDIA at 2.8, $280. The NVIDIA Connex was from 280 to 450, right? Uh, that is effectively, I don't even trade different. I don't really trade that much differently from when I had a small account, to be honest. I just hold my cons for a little bit longer and use like trail stops a bit better. But nothing really is fundamentally different from how I trade a large account to how I would trade a small account. It's the same thing, right? Nothing's really different. I did a challenge back in 2024 with you guys. I think it's 2024. I took 25K to 38,000, right? And that took me over 2 months to do it. And it was the same way. We did the same thing. We did only traded SPY, and it was effective and it worked really nicely, but it's a little bit slower. And for me, even now, a 25K account is a little bit on the medium side of accounts. Once you get to 25K, you can actually start to make money, right? When I say actually start to make money, I mean like you can make enough money from trading to pay some of the bills. But when you're under 25K, it is a little bit difficult to do that. And that's like the good benchmark to hit for most traders. Okay. So let's talk about something more different here. Okay. I want to talk to you about something else. I want to talk to you about a developing versus an advanced trader and how you should be trailing out of trades. Okay. So we're taking a complete flip here for a second. Are you guys ready? Are we on the right page here? Everyone kind of understands what I'm saying. I know this is a very crazy session where I'm yelling at you guys a lot, but I hope you're taking it the right way because again, I'm yelling at you for your own sake because I was in the same. That's why I showed you my Robinhood account. Okay, I'm not different from anybody. I'm the same as you guys. Nothing's different. So don't take this in a pretentious way. I'm not trying to act like that or be like that. I'm not like that. Okay, showing you how it is. All right, so let's move on. Let's move on. Let's talk about something else here. I want to talk to you guys about a approach that I used when I was a developing trader versus an approach that I use as an advanced trader, and how you kind of scale out of trades, right? So we talk about like a trail stop approach as like a very one-dimensional way. Do you guys know what trail stop is? Do you guys know what trail stop is? How many of you guys know what trail stop is? Okay. So a lot of you guys know what this is. Basically, the idea is you have a trade, okay, that is going in your favor, right? Let's just say like you enter longs over here, okay, and it's going in your favor. The most simple trail stop is basically going to be one of two ways, one of three ways, really. Number one is going to be trail stop based upon your contract value. All right. And so what that means essentially is if you enter longs at 2.8 and your stock goes to 3.2, right? And so effectively what that is you just made, how much did you make on that trade, right? What's 3.2? 3.2 divided by 2.8, right? Effectively, you just made about 14% of that trade. Okay. So you take one trim, right? One trim maybe to get some profit off. Now what you do is you move stop to somewhere around BE, right? Break even. Okay. That's one trail stop approach, which would be moving your stop basically to 2.8. Okay. Because that's what you bought it at. Maybe you move it to 2.75 or something like that. Something around your break even point would be an effective trail stop for your contract value. I don't like this, to be honest, because options are derivatives, right? Options are simply just derivatives of the stock price. So by the time it hits where you entered, because of the theta value, theta decays the contract value over a period of time. If you enter a trade at 9:32 a.m. Eastern Standard Time, and you entered NVIDIA calls at 268 per share, by the time NVIDIA goes to 269, you're up 20%. By the time it comes back to 268, you're no longer at break even anymore, right? So your contracts are no longer going to be 2.8 if you understand where I'm going with this. The reason why is because you just lost time, right? The time difference between where you entered and where you are now is subtracted from the stock price, which is the theta value. And so by the time it hits your price point where you actually enter the trade, the contracts are probably at 2.75, right? A little bit less than where you entered the trade. So having a trail stop based upon contract value is hard to do properly, right? It's very hard to accurately do this. And I make mistakes with this all the time. I will do this I would use this. Don't get me wrong, I use it sometimes. But the most effective trail stop approach is going to be off of structure or off of an EMA. Okay. And so two and three are actually more effective approaches. And so what does that really mean? What does structure and what does your EMAs mean? So let's first of all talk about structure. If a stock is going higher like this, right? Stock is rallying in price higher, okay, and it consolidates, and you enter long in this consolidation, right, with a stop loss down beneath this level, right, and the stock moves higher, so you take profit into the next level here. Well, where's the most recent structure? The most recent structure is just going to be the most recent swing high, which in this case is right there. So if you see the stock pull back, right, and you want to know where's your most effective trail stop based on structure, it's off of the 5-minute candles off of the previous set of highs, which is right over here. So your stop loss would simply just be beneath those series of highs. Okay. But effectively, that means that you're going to be getting out somewhere close to break even anyways, because again, that was you entered over here, right? And when it pulls back over here, you're still up 5 or 6%. There's no reason to give it back to here because by the time it pulls back over here, it's failing the pull breakout, right? So basing it off of structure is more effective. You understand what I'm saying here. It allows you to get out when the stock actually fails the upward structure, the upward move, right? So when you look at the 5-minute chart, it will tell you that, right? And that's what structure is. The third approach is going to be an EMA approach. And the EMA approach is going to be simply you turn on clouds. I built an indicator a long time ago. When I say build an indicator, I just mean I paid people to help me do this. But it's called HTT Clouds. And I use this every day in every trade I ever take. I will use either the 5, the 8, or the 13 EMA on every trade I take. So if I am long Nvidia, right at market open here, watch this, I'll show you something. I'm long Nvidia at market open, and I want to know, hey, where's my trail stop? Okay, my trail stop is either going to be off of the structure or off of one of the EMAs. If I'm long over here, right, at 214.37, where's the most recent structure on Nvidia? Unfortunately, I don't have any good structure points here where there's no like big ebb where I can like define risk and say that's a clear structure point, right? I can't tell you that because this is just a straight upward line. So reverting to EMAs is the only way to trail out of this. You understand what I'm saying, right? You can't use, how could you possibly use structure in a trade like this? There is no structure. It's just a straight upward line move higher. You can't use structure. You have to use EMAs. So I will jump to my cloud, either the 5, the 8, or the 13, and I'll say, hey, which one am I using today on this beautiful Friday morning? On a Friday, I'm using the 5 EMA. So when I'm long here at 214.4, right, I am holding this to my target at 218 and change, okay, taking trims to 218, but then I'm effectively moving my trail stop to the 5 EMA, right? Every time we pull back the 5 EMA, I'm using that and maintaining that as my stop loss until eventually what happens? So eventually, bam, right there, Dunzo, I'm out, right? I'm out. I'm gone. We broke the 5 EMA. We broke my EMAs. I'm gone. I'm done. I'm not there anymore, right? Now, once the trade has developed a structure, which in this case, it kind of did here. I'll show you something. See right here where it's starting to form a swing low here, right? And the swing low is formed. If I was entering long now, well, I can tell you there's a structure here, right? Big move higher, pull back, the swing low has developed. If I entered long now, my stop would just be beneath the structure low, right? And so that's the difference between having structure and not having structure. When you don't have structure, you got to use EMAs. When you have structure, you could use this as your low, right? It's your low point. Okay, it's my new stop loss. Bam, right there. My take profits back in highs. I can enter long now and get a move higher, right? And maybe every candle we move higher, I'm no longer using EMAs anymore. I'm basing it off the previous 5-minute candle low and holding as long as that previous 5-minute candle low holds, and my target is back into session high, right? Why am I showing you this? I'm showing you this because as a trader, your goal is to continuously do this and respect your trail stops, either if it's a contract value trail stop, whether it's a structure trail stop, whether it's an EMA trail stop, until you get a few base hits and the occasional banger trade. That's what you do, right? That's all it is. As a trader, that's all you're doing. You're doing nothing more than that. You are a developing trader. You deserve nothing besides that, okay? As an advanced trader, when you start making some money, right? You're over 25K, you're over $30,000, you're making some bread now, right? Now you can start doing things that are a bit different, okay? Now you deserve a little bit more. You've just put in all the work. You now can reap some of the profits here. And so how do you change it now? What do you do differently? What do you do differently from a developing trader to an advanced trader? Now I'll start to do things that is a bit different. I'll buy along here, the same point at 214.8, 214.4. Okay. I will hold longs on the trade. All right. But when we pull back to my trail stop, I'm going to add contracts at my trail stop with 0-day contracts or with 1-day contracts. And I'm going to squeeze more value on this trade. Every time we pull back to the 5 EMA, I add more contracts. I sell into highs. Pull back to the 5 EMA, I add more contracts. I sell into the highs until eventually it breaks down. I stop out of the trade and walk away for a much larger gain. What am I saying here? I'm saying that basically, as a developing trader, the EMAs keep you in a trade. As an advanced trader, the EMAs and structure keep you in a trade, but also give you the opportunity to add back to that trade with your initial size using that trail stop as your stop loss. Do you understand where I'm going here? What this does basically is it allows you to make a shit ton more money, and make more bread. That's all it is. Make more money. But you don't deserve this if you are a developing trader. I didn't deserve this until I was 3 years into my trading. I made $50 per day for a very long time. I didn't deserve this. I wasn't able to do this. The problem is that when you do get stopped out on a trade like this, you're going to lose some money, right? You're going to make a lot of money when it goes up, but then eventually when it fails, you're going to lose a little bit of money. You have to be nimble, right? And so it's like you have to earn it. You have to earn it to deserve it. I don't know. The 20% of you do deserve it, right? There's 20% of you here probably in the Zoom right now that deserve it. But the 80%, if you're not profitable yet, if you're still developing as a trader, you have to follow the first approach, which is simply just use it as your exit, not your add point, right? But once you get to a certain point, you're going to need this, right? And this is going to allow you to make more money and squeeze more out of your trade every single time. We are beyond our time. It's 5:40. I'm a liar. I'm nothing more than a liar. It's 5:40. We are late to the show. All right, 5 more minutes. Give me 5 more minutes. Right, 5 more minutes. I'm supposed to be fast. All right. Data-based approach. Okay, data-based approach. Go through your data. All right, and find out where do you perform the best. My average win on a continuation setup is $1,750 per trade. My average win on a reversal setup is $775. What would you focus on? Okay. Not going to say anything more. Focus on the data. Not saying don't take reversals. I take reversals too. But what would you focus on a day-to-day basis? Okay. That's just what this is. Okay. Moving on. Now I'm going to talk about this. This is only for day trades. This is only for day trades. I don't believe that this is. I don't believe that this is effective for long-term investing. I don't believe that this is effective for swing trading. This is only effective for day trades. Okay, I'm putting that warning out there right now because when it comes to long-term investing and swing trading, I'm a big advocate for buying the dip, BTD, right? Buy the dip, always buy the dip. But when it comes to, and again, we do that all the time, but when it comes to day trading, this is what I'm going to explain to you. Okay. So let's go to this market trends and structure. Markets naturally continue more than they reverse. Most pullbacks in an uptrend or a downtrend are not true trend changes. One trend can create many continuation entries, and true reversals are statistically less common. This is all based upon data. Okay. Institutions reinforce trends. For example, you may see a stock on the 1 hour chart do this, okay? And you may think that on the five, this is a 1 day chart, okay? You may think that on the day where it does this, that it's a downtrend in the 5 minute. It's not, right? It's simply just a larger time frame uptrend, or even maybe a 1 hour chart would even tell you even more so, right? And so big money scales into positions over time. And they often are scaling in on those smaller ebbs or the smaller pullbacks to demand. Okay. And so funds buy these little dips in uptrends, right, which happen every day, and they sell the pops in those little downtrends. Okay. This creates repeated continuation opportunities, and continuation equals trading with institutional flow. This is only for day trading. Okay. I don't use this at all. I have the complete opposite approach for long-term investing. Okay. Market trends and structure. Momentum creates a feedback loop. So traders chase the strength, shorts cover, algorithms pile the momentum, and option hedging creates even a more accelerated trend. And trend strength attracts more trend strength. Okay. It's a confirmation bias approach. When NVIDIA is breaking highs on a strong SPY day, NVIDIA is just going to go higher, right? Trend strength attracts more trend strength. It's a very simple approach. You have to think very simply on smaller time frames. Reversals require precision. I like reversals too, but reversal traders have to identify 5 things. Okay. Exhaustion, trap participants to the upside or to the downside if it's a downward trap, liquidity sweeps, structure breaks, and sentiment shifts. This is difficult to do. Okay. This is difficult to do. There's nothing wrong with it, right? I trade reversals all the time. But for me, you'll find it's often easier to trade those continuation setups. If I look at my own statistics, right, and I would go back to a trade like let's go back to this trade here, right? This was Nvidia from what's it called? Friday, right? This was my Nvidia Friday trade. You can see here, I traded 45 contracts, net ROI 28%. I bought it here and my final sell was there. That doesn't mean that I bought here and held all the way to there, but it does mean what? It means that I bought my first trade here and I sold my last trade there. If I were to actually go into this, right, and review this trade in depth, let's just say, for example, this is a continuation setup, right? If you were to buy calls here at 10:35 in the morning, right, on a pullback, is that a reversal setup or still a continuation setup? What would you say? Answer this question. I want to hear what you guys say here. If you buy calls right here at 10:35, is that a reversal setup or a continuation setup? What do you guys think? There's no right answer. There's no wrong answer. I'm going to tell you what I think it is. It's 50-50. What do you guys think? Hold on, continue. I want to see more. I want to see more answers here. I want to wait till I see a few more. Some of you got it right. A lot of you got it right. It's continuation. Okay, it's a continuation setup. Uh, it's not a break of structure. Exactly. So Will just said it. It's not a break of structure. This is still a continuation setup. It's a break and retest. Exactly. Right. It's all it is. And so often, like what defines the structure is just going to be what the 1 hour time frame is saying. If the 1 hour time frame is bullish and you're buying calls, it's still just bullish, right? And so you buy calls here versus you buy calls here, it's still a continuation setup. And when you journal it. Like, what did I journal here? Obviously, this was a continuation. I got it over here, right? This is obviously a continuation setup. But if I were journaling over here, my journal would say the same thing, basically the same thing, right? I say continuation setup, previous day high break, lining up a 1 hour level, Wednesday contract, 0 to DE. I don't know what I'm talking about over here. I'm talking about something about the contract values. But the point that I'm trying to say here is that know the setup you're trading and know what works for you the best and focus on that the most. That's all I'm trying to say here, right? As a trader and as being in this space for a long time, I try to provide you guys value, and I see a lot of times that we say we're going to do something, and then at market open, we run around chicken without a head, and we don't know what we're doing, and we're just jumping around in trades. Let's not do that, right? For me, for Mike, for Rav, for Aristotle, for Midas, we have a plan, and we just trade that plan every session, right? That's all it is. That's why oftentimes you don't see us in the same trade. And the trades that we are in the same are usually trades that we were all uniquely watching at the exact same time. Did you notice that Aristotle and I both longed NVIDIA yesterday session, almost around the same time? That's not because he was in NVIDIA or I was in NVIDIA and we saw we were in NVIDIA and we decided to long it together. No, it was because his setup said, hey, let's long NVIDIA. And my setup said, hey, let's long NVIDIA, right? NVIDIA for me was what? Was a break and retest of the previous day high in 1 hour structure. That's all it was. And so this was a top watch for me. Okay. So what is the point of today's session? The point of today's session is to reinforce the systems that I do every single day, which brought me out of the gutter. Okay. I was in the gutter. I was no different, right? I was a trader. I was a trader before I was an educator. Okay. I was a trader before I was an educator. I can tell you that definitively. I have the data that backs it. Again, for you guys, you need to focus on your system. It doesn't matter if Brett's in NVIDIA and you don't want to watch NVIDIA, do not enter NVIDIA, right? Focus on what works for you. The chat can be incredibly powerful. We can give you extra conviction and setups. We can show you the things that we're watching and that may help you in your trades, right? It can help you, but it can also hurt you if you don't focus in, right? And so that's what I'm trying to say here. Lock in and you'll be okay, right? So I have 5 minutes for Q&A. Brett is just confidence for me. Hell yeah, sure, that's fine. Would you advise against getting into your trades on live, what you guys call it, and develop your own strategy? I would advise that how do you think I learned? I learned from Mike, Rap, and Aristotle. That's what I learned from, right? I literally, that's who I learned from first, right? I looked at their systems, I looked at their strategies, and I pinpointed what I liked from them, and then made them, pull each one. Maybe I do things a little better, maybe I do things a little worse in some areas, right? But that's all I do. So you can learn a lot from live trading. You can follow us in live trading and probably make money, but you can also follow us in live trading and lose money, right? You got to focus on yourself. You can use this for confidence. Again, I do well, right? You can follow me for a month and you probably will make money, but who knows what size I'm in? Sometimes when I'm traveling, you think I'm trading the full size, right? That's the thing. You want to be able to trade on your own and use us as extra degrees of confidence. That's how the real traders win. I've seen many traders in this chat, right? We have many traders in this chat who are actually seven-figure traders, genuinely seven-figure traders, right? Do you think that they are on live every single morning and hitting the buy button as soon as I say buy? No, right? And maybe they do sometimes. Maybe they know what we're doing and they have our bias and they trade with us on live and they have us in their ear. Sure, they do that, right? But they're not pressing the little buy button when I say I'm buying, right? They're doing their own research first. They're doing their own research first. That's what this is all about. Okay. And again, there's so much to learn live. We're here every day, right? We're here for you, but you have to learn a little bit yourself in order to get the seven-figure mark. Okay. How long was I in the gutter? I was in the gutter for a long time. I was in the gutter for a long time, at least a year, maybe 2 years. Pre-market's helpful. I'm glad, Rhonda. I'm glad it's helpful. Consistency is key. I use Schwab. I use Charles Schwab. Charles Schwab under the Thinkorswim platform. When you're using the EMAs, stop outs, etc., 5-minute time frame is what I use. Yes, I use the 5-minute time frame. 5-minute time frame. I'm building an algorithm right now that's going to help you guys a lot, by the way. It's an indicator. The problem with it is, I'll tell you a problem I'm having, right? Here's the problem. Anyone that knows anything about this stuff, I'm going to tell you a problem. The problem is I have an indicator that has an edge. Okay. I have an algorithm that has an edge, like an actual trading algorithm that has an edge, has about a 71% win rate and trades at a 1 to 2 R. It's actually a very profitable algo. Okay. The problem is that if I publish the algorithm, it no longer will be profitable because it's going to be messed up. So I don't know what to do with it. And so I'm trying to figure out how to post it for everybody in a way that doesn't mess up the algorithm. Do I use it daily? No, I don't use it daily. I just I've been playing with it. I've been adjusting it off real data, but and it works well. It's actually effective. It's a very effective system. It won't trade as well as I trade though, but it is really good. I will post it, but I'm gonna make it free. It's free. Okay, it's generally gonna be free, but I'm gonna make it so you can adjust it. I'm gonna make it so you can adjust it so that I don't ruin the algo. And if you find the right sensitivity for it, if that makes sense, then you'll get the same result. But the problem is that any effective system that is posted like that will just it gets ruined. You understand what I'm saying? The alpha gets ruined. There's no alpha. After it becomes public, there's no alpha anymore. Your entries are stated are always lower than when you signal. I'm sure most of us would be happy to know how you get your entries as close as yours. The problem is that sometimes I'll enter a trade after it ticks green on the chart, and I'll buy in my broker, and it'll say 2.8, but I'm actually getting filled like 2.85, right? So even sometimes I say I'm getting filled at 2.8, but I'm getting filled at 2.5, not 2.8, right? And when it pulls back to my average, that's when I start like my set average. That's when I actually buy more contracts. In most cases, you can get the trade that I'm in at my average, but not at that exact second. You understand what I'm trying to say there? Very often it pulls back to my average. Also, sometimes I press buy market, right? On my Thinkorswim, it says 2.8. I buy market, it's filling me at 2.85. But I'm not saying 2.85. I'm saying 2.8 because that's the thing that I see in my broker when I first pressed buy. It makes sense? I hope that makes sense to you. And it's good to have a broker that fills fast. Yeah, it is good to have a broker that fills fast. For break retest, you wait for the 5 minute candle retest. That's more like intricate as to what I would do. I use sometimes the five or the two. I use market orders, AJ. Is Legends good? I don't know. I don't know. Do you want to ask the guy that's down $10,000 year to date in Robinhood if he knows anything about Robinhood Legends? I don't think I'm the most accurate individual for that question, right? Asking the wrong guy over here. Options for swings and leaps. I don't. You want my answer to this? You don't want my answer to this. I don't believe in leap options that much. I just don't believe in it. I like maybe if you do it, to start off an account is fine, right? Maybe you do it to get things rocking in your account a little bit. But leaps, I just like would rather be in shares. I would rather make money day trading, make money in swing trades, and then buy a shit ton of shares rather than be in leaps because leap options decay in value, and I just hate that, right? But Aristotle is an absolute menace with the leaps, right? So you know that just because I don't like something doesn't mean that it isn't effective. It's super effective for Aristotle, right? But for me, what I do, I would rather just buy, okay, I could buy $15,000 worth of SoFi leaps, or I can buy $200,000 worth of equity. Okay. So, I mean, it's up to you what you would do. If I am trading a smaller account, then obviously the leap approach is a better approach. But when you grow the account, you want to just sit in shares. Sitting in shares is the most easy thing to do. My full size is my starter size is like between 4 and 5K. My full size is between 8 to 12K. I don't do mentorships. There's no mentorships, no mentorships at least for a long time. How do you determine your daily profit goal? Um, Daily profit goal is 20% of your account, 10 to 20% of your account, and then assume 20% profit on that trade. That's your daily profit goal. I know that was a quantitative answer, but 20%, okay, if your size is 20% every trade, or even 10% every trade, assume you get 20% profit on that trade, that's your daily profit goal. Okay. So again, it'd be different depending on what account size you have. I use Webull, not IBKR. I don't like interactive brokers as much, but I have friends that use interactive brokers that absolutely kill it. So again, it's not going to be very different. I prefer Webull because I know their platform a bit better. I don't use liquidity sweeps or fair value or FVGs. I don't do that. All right. Any last questions? I focus on gamma exposure only on larger. I do, but only on larger time frame trades. I do, but only on larger time frame trades. I don't. It does. It's not gonna affect me on like on a 5 minute chart, right? But it does affect like what I'm watching that session for gamma exposure. It's a good question though. And it helps me stock pick properly. Was this helpful? Did you guys find this helpful? Did you guys find this helpful? I hope you guys found this helpful. Again, I hope that my intention with this is to not sugarcoat things because that's not why you guys are here. I am just being honest and showing you what I did, and it worked for me. And this is how I wish I would have been talked to when I was trading. Again, don't take any of this in a disrespectful way. I wish someone did it for me when I was like developing as a trader. And 20% of you guys, you don't need to hear this. For the 20%, you're good. This is for the 80% that are making mistakes. All right. So I'm gonna call it there, guys. That's it for me. Have a wonderful Saturday. If you guys appreciate this, throw me some love in the gains channel or the testimonials channel, whatever channel is there. I'll look at some of the things you guys post. I'll probably answer some questions as well, but not now on live. I'm gonna go enjoy my Saturday. Post it there. If you have a question, you can post it there. If you have a testimonial, post it there. Anyways, I'll see you all on live on Monday. Let's have a great start to the week. Bye, guys.